All right. Welcome everyone to another Investors Performance Group meeting. I'm excited to host you guys again tonight. We are live, ready to rock and roll. And as always, we would love to hear from you guys as you start joining into this live stream. So drop in the comments where you guys are tuning in from. I already see we have Yuri. Welcome, Yuri. Good seeing you. I see you're in Langley today, so that's interesting. Hope you're enjoying your visit back to the mainland. And Ross, welcome to the live stream from Steveston. So we appreciate having you guys here. As you guys are jumping in, remember, drop where you're from. We'd love to get some engagement from you guys, and we're going to kick this thing off right away for you. So let's bring up my slides here, and let's get the party rocking tonight. So again, this is the Investors Performance Group. This is our May 2026 meeting. We're almost halfway through the years, if you guys are through the year, I should say, if you guys can believe it. And the stats are really interesting right now. We're going to go into the market stats a little bit, but it's been kind of a wild ride through the spring, and we're gonna dive into there a little bit and talk. Now, of course, today's meeting also is going to be a little bit different because while this is the Investors Performance Group, we are going to be focusing on the conversation around first-time home buyers. And as investors, someone who has bought and sold multiple properties out there, the first-time home buyers, the generation of people that we know who talk about not being able to buy a home, not being able to afford to get into this market, are the ones that we have the opportunity to inspire because we are investors, we're buying multiple properties, but also we can educate them. And I'm excited for this whole conversation today to be around the first-time home buyers. So a little bit of a different track than normal, but I think it's going to be a lot of fun and some great conversation today. So again, Investor Performance Group is brought to you by the Kelly Fry team. We are a full-service real estate investment team that helps you build your wealth in and around the Lower Mainland or across Canada. We have service providers all over Canada for you guys. So let us know where you guys want to invest, and we'll put you in touch with the right people. We have everything from the right accountants to lawyers to home inspectors to contractors for whatever strategy you guys are looking into. All right, here is our agenda tonight. Again, as always, we're going to start off with a market deep dive. What in the heck is happening out there in the real estate market? And we're going to actually show you the real stats, not what they're talking about out there on the news, because of course, the news only says one side of what's going on. They aren't boots on the ground like we are. Then, of course, we have our keynotes tonight, which is Joanne McNeil and Cindy Dudley. They're going to be talking about the first-time home buyer plan that literally no one's talking about out there. And I'm excited because this is where, if you can learn this, you can share this to other people. Those first-time home buyers that you could inspire could later become future JV partners. You never know. So this is a fantastic topic we're going to go through. And then our hot deals tonight, we are going with that first-time home buyer theme, and we're going to talk about hot buys for first-time home buyers to get them started in the market right now. So we're not looking as much at cash flow tonight, but of course, we still have lots of good cash flowing opportunities. So give me a shout if you want to know what's going on out there. But this is going to be kind of fun. I'm going to show you guys some entry-level properties that a first-time home buyer could potentially get into, and prices will shock you today. All right. And as always, we love participation from you guys. So if you're watching this right now, feel free to take a picture of your screen, tag us on social media at Kelly Fry Team on Facebook or Instagram. Share your ahas, share the things you're learning, and of course, participate in the chat at the highest of levels. Again, if you're not already subscribed as well, right below my video here, right below this screen, there's a button. If it's not, if it's red, that means you need to click it. If it's gray, we're good to go. So let's dive into it. What is happening out there in the market right now? So this is from GVR's president and Fraser Valley. Home sales remain relatively flat compared to April last year, but a divergence is emerging between market segments. And for the Fraser Valley Real Estate Board, home sales recorded year-over-year increase, with activity also rising month over month as the spring market begins to show renewed activity. So we've been talking about this a little bit in our office, where we've seen a little bit of a pickup. I am not one who likes to jump on the bandwagon and starts posting all over social media like you see some agents doing right now. Oh, the market's turning around. The market's doing this. We have had a decent start to our spring. It hasn't been something that's been consistent. One week it's really busy. Another week it's pretty slow. Suddenly it's a little bit busier one week. Another one's a little slower. That's not enough to really start to say we're entering into a trend line. However, we will go through the stats and show you where things are at and where you can start thinking about taking advantage in the market if you're looking to start making some moves. Because at the end of the day, there are some indicators to show that the market is maybe turning a corner. we do want to see a little bit longer stats to really cement that conversation in. So first and foremost, we take a look at the inventory out there. And this is where we don't want to jump on the bandwagon that suddenly the market's turning around yet, because supply and demand at the end of the day. What we can see here with the trend line is that the inventory is continuing to rise. It's been a steady shot straight up from December through April now. And as you can see, we're actually at a point that's now higher than we were last year in terms of inventory. More inventory means more choice for buyers. If you're an investor or a buyer right now, that's a good thing for you, because that means you can actually have some time to look around. There's some inventory for you to peruse and, of course, negotiate. That's the key word right there, is that you can actually negotiate in the market we've been in. And in some cases, the deals that we've seen, like the prices coming down on some of these offers, are nuts out there right now. As you can see here with the inventory in Fraser Valley, we're actually a little lower than you can see last year overall, but that trend line is increasing from December. And Chilliwack, as always, is just pretty steady Eddie. We haven't seen too much of a change out there, but it is a smaller market segment as well. All right, taking a look then over at the sales. This is the demand aspect. And this is actually a little bit of an interesting rise that we've seen here. From January, we are at an all-time low. So January did not start off well for us. However, you can see that sales did jump up quite a bit. However, we need to take this with a bit of a grain of salt. 2,109 sales versus 15,500 listings. The ratio is not showing anywhere near the fact that we're in a seller's market. We're still bouncing around that kind of balance, leaning towards buyer's market at this point. And same thing, we had over 5,000 listings in the or I think it's a little over that. Let me go back one slide. In the Fraser Valley market, here it is, 8,000 listings. There we go. And we only had 1,000 sales total. So again, we're showing here that the sales are picking up. So we have noticed that. So well-priced properties are selling. However, there's still not a rush on the real estate yet. How you know you're in a seller's market or leaning more towards that seller's market is if the inventory is starting to keel off, but the sales are still going up at a sharp level. Right now, we're still having high inventory and a sharp incline in sales, but it's not going to keep pace. And that's the problem we're in right now. So what impact does this have on pricing, you ask? Well, some positive impact, but we're still not really seeing a huge jump. I do believe, based on the last 6 to 9 months that we've been looking at over a year, we've kind of hit that flat line, right? When people talk about, oh, is it going to go down further? Maybe. But history is now showing that we're kind of bouncing around possibly that bottom at this point. You can see here that the value of homes are almost identical to what it was last year, right? We're up ever so slightly as an average in Greater Vancouver. In terms of Fraser Valley, same thing. We're talking about a $5 million difference from last year as an average. And Chilliwack is still showing down slightly over last year, but it's not a huge dramatic change, right? In this case, it's around less than $40,000. So we have seen that we've been bouncing around the bottom. Could prices go down a little further? Possibly. Could they start turning around and going up? Maybe. Or could it stay steady Eddie for a while? I think it's going to be steady. We're not going to see a lot of change for the near future. Maybe another 12 months or so, but anything could happen. Nobody knew what was going to happen during the pandemic, and nobody anticipated the drop that we had either. That's the crazy thing about real estate. So you have to focus on the fundamentals at the end of the day. Okay, some of the things that we've also been looking at is the sales to active ratio. So obviously, this is what determines if we're in a buyer's, balanced, or seller's market. Every month we've been looking at this, and this is where we have seen some turnaround. As you can see, back in January, we were firmly rooted in a buyer's market. So the opportunities for negotiation were much higher in the January period than we're seeing right now, because we have entered more of that balanced market. What's considered a buyer's market is anything below 12% for an extended period of time. So as you can see here, specifically, the Fraser Valley was in a buyer's market for quite a bit of the last year, jumping in and out of that balanced market area as well. You can see here that Chilliwack started still pretty strong. Anything 20% or above is considered a seller's market. So Chilliwack's been pretty steady in that balanced market, but they have been on the decline right now, still staying in that more balanced situation, a little bit of a buyer's market at the beginning of the year. And as you can see, GVR has been bouncing around in that buyer's balanced market, dipping into more where you got better opportunities in the winter months and back into that spring market. With the increase of sales, we are seeing a little bit of an activity increase back to that balanced market. And then one of the final metrics we like to look at here is what you're actually averaging as a percentage comparative to list price. Now, again, with all of these stats, all that you're seeing here, you have to take this with that grain of salt that these stats are predicated based on properties that have actually sold. Okay. The total inventory, obviously, as we accumulate more inventory, that's the one stat that factors in properties sitting. Everything else that we are seeing is based on properties that have actually sold. So these sales to the percentage of original price marker here, this is talking about properties that are actually getting to a listing point that is generating an offer. So this doesn't factor in if they did $100,000 reduction prior to getting an offer. This doesn't factor in, someone taking it off the market for a week, putting it back on at a lower price, and then getting an offer. So keep that with a bit of a grain of salt. But the average that negotiations are hitting right now are around that. You can see 96%. So when I look at this stat and I say, okay, if the averages are hitting around 96% of list price, and I throw an offer in and I can get anything below that 96 in the area that I'm negotiating, I'm probably getting a little bit more money on the buy than I would be, the average person out there. So we just did a deal recently that hit, it's a 10% drop comparative to list. So we know that we actually had a motivated seller at that point getting a better purchase on the buy in that regard. So it's a little bit of an indicator, but again, you do have to take it with a bit of that grain of salt. This is predicated solely on the ones that actually sell, not on the ones that cancel relist or drop their price. Okay, one of the other things we like to do out here is just take a look at what the numbers actually look like in some of the more micro aspects. What you just saw is the generalization of Greater Vancouver, Fraser Valley, and of course, Chilliwack and District. But we're factoring in multiple cities. We're factoring in multiple property types from old to new to detached to condos. This is where we start zooming in the lens just a little bit more in order to start to see what's actually happening in the different markets. So when you're starting to analyze if you're going to go invest in Chilliwack or Abbotsford, or maybe you want to stick around the Tri-Cities, you can start to look at these numbers and see where it makes sense. Where's the biggest drops? Where's going to have the biggest opportunity? Are we seeing inventory increasing so you have more choice, or is it decreasing? So taking a look at Chilliwack here, year over year, this is year over year, Chilliwack is down 22%. So that does show in line with what we saw. Prices have been on the decline. The average detached property now sitting at just over $875,000. However, a couple things to note is that the total listings are down 17%. So we are seeing a contraction on the total inventory, meaning that those prices will either steady out as long as we see sales happening, or there might be a little bit of a rebound that could happen depending on how much that continues to drop. The average days on market right now is taking about a month to sell. Now, again, keep in mind that average days on market is based on properties that actually sell. There are a lot of properties out there that sit on the market for hundreds of days and eventually just be removed from the MLS and they don't get pulled into that stat. Townhouses out there have actually shown a little bit of resilience and they're up 3.6% in the market. We are seeing a huge jump in inventory. We're up to 90 listings right now in the Chilliwack market, bringing that up 42.9%, almost 43% there. But days on market have dropped 34%. So they're selling faster in the last month comparative to last year at this time. And then condos took a pretty big hit at down 18.4% year over year. Days on market are up 151%. So that means they were selling really, really quick a year ago. Now they're taking much longer to sell, a little over 3 months at this point to sell on average. So that means, again, some are taking much longer than that and some are selling a little faster, but it's really going to come down in this condo segment to making sure that you're not holding out on your price if you need to sell, because you're just not going to get it. You're just going to rack up days on market. And at 98 days on the market, that is the biggest enemy to your home's value right here. The longer the days on market, the more hits you're going to take from buyers eventually when they start offering. Because the number one question that we as agents get asked when we see a long days on market is, what's wrong with the property? Is there something wrong that we need to be aware of, or is it overpriced, right? And obviously, inventory is on the rise. All right, heading out to Abbotsford, a little bit more steady out in Abbotsford, only down 1.7%, still averaging just under $1.3 million out there. Inventory has dropped 13.6%, and days on market's down to just flat 30 days to get a property sold. Not too bad in that market. We'll want to continue to monitor to see if that inventory continues to drop in that market segment. Townhouses are a little bit of a different story. They're up slightly, but their inventory is rising. Just over a month to sell those, and condos down 14.3%. Their inventory has dropped slightly, though, down 6.7%, but it is taking longer to sell properties out there, just about a month and a half at this point. Mission market, surprisingly, is showing a reversal at up 11% over last year. We have definitely noticed some activity in the Mission market. We've been out there quite regularly the last month or so, and there has been some serious movement on certain properties out there. So it's no surprise that we've seen that one hold steady, in fact, gain a little bit. But the Mission market is one that you got to take with a little bit of a skewed eye on, especially in the condos and townhouses, because you can see the overall inventory, while up 18%, still is only 52 listings on the market. So, down a little bit. There's not a huge market segment of attached. It's definitely more of a detached market out there. So these numbers are going to continue to rise as more development happens. However, I remember even 4 years ago, if we hit 10 listings on condos, we're like, oh my God, that was high inventory. We're still only 50 condos on the market right now. And so prices are holding steady because there's just not a lot of inventory. That's one of those markets where if people are looking to create affordability, Mission is that market that desperately needs it right now because they do not have a strong attached market. It is predominantly a detached market out there. Okay, Langley, one of the more expensive markets in the Fraser Valley, down 10%, averaging $1.5 million. I mean, that is quite low for Langley and detached now as an average. I remember when they were bumping up around that 1.8, 1.9, like getting close to that 2 million, which is kind of crazy to think about. Their inventory has dropped slightly, days on market taking a little longer. Townhouses took a bit of a hit. Now, you can see here in this market, this is a market that's been heavily affected by a lot of development. So condos and townhouses, they're up quite a bit. I mean, almost 500 compared to Mission that had 50, 500 condos on the market right now. It's up 1.2%. Condos have taken a dip, down 8.3% as an average, and about 40 days right now, up 60% to sell, and townhouses taking a bit of a dip as well. Okay, one thing we do like to break down certain pocket segments here is the difference between the Langley city. We talk about the micro markets. That also goes down in deeper into the cities as well. So when we actually bring up the city of Langley compared to the average of Langley, we can see a little bit of a weird shift in this little pocket comparative. So you can see here the actual average property in Langley City is only 1.26 million, but that's up 22% over last year. So you got to think about all the other areas of Langley that are dragging that average down. So certain pockets have definitely been hit a lot harder than pockets like City of Langley. You can see the inventory is down, only 78 detached homes there, and it's taken a month to sell. Townhouses, though, they're on the same kind of track of the negative, but they're a little cheaper in the City of Langley. And that's just because places like Willoughby are going to sell for higher. Willoughby's a little bit more of a desirable area for townhouses. 22 days to sell, and there's only 36 on the market. It is down in inventory. And then we look at Langley City. Average is 500,000, down 8.3, right on par with the city, with Langley as a whole itself. But it is up 105%, so now just over a month to sell, and inventory is climbing at a higher rate in the city of Langley compared to the average of Langley in general. So again, this is when you start really diving into these micro markets, understanding these little pockets. If you've been looking at detached in Langley, maybe Langley City has some good opportunities because of price, and those sellers are going to probably hold to their price a little more because those areas seem to be holding the value. You may need to look a little outside of City of Langley in some of those pockets where people are a little more motivated and the prices have been declining more rapidly. So this is how we start thinking like an investor, to look at these micro dynamics to understand the type of offer we're going to put in on a property. Okay, Maple Ridge, down 6.7%. We're at about $1.25 million there. Inventory has dropped a bit, so keep an eye on that as we go. Townhouses down 8%, condos down 13.8%. They are just about 450 as an average now. We have seen some really insane deals. In fact, we had two listings in the same building as an aside here. One was a 2-bedroom, 2-bath, and one was a 2-bedroom, 1-bath. We sold the 2-bedroom, 2-bath unit for 500 and I want to say 15,000. And then at the same time with the same listing in the same building with the 1-bath, that one started at about I want to say 460 something, sold for 408. So that one had a massive drop. So it depends on the product type as well that you're going to get. And you're going to see, a lot of these examples where awkward floor plans as well could suddenly have a big drop. Okay, comparing that across another one of the submarkets there, just as an example, you can see here again, the detached market in general is down, but this area is holding steady, up 3.9%. Inventory down, is big jump on the days on market. That means they were selling really quick last year. Townhouses, not as big a drop in this area. Inventory is up slightly, but there's only 19, right? And condos down 7%, so not as drastic as the average of Maple Ridge. But inventory is climbing, so there might be some added pressure into the West Central condo area. Okay, North Surrey, everyone's really been taking a look at. Question came in: how do you define Langley City versus Langley? So when you look at the map, Langley City is actually its own municipality. So it's actually just, I think it's like 4 miles by 4 miles, like a little circle. So that is Langley City. Everything else around that is the township of Langley. But in the stats, it includes all of that, like Langley City Township, everything in one big clump when you pull the stats, and then you pull that city of Langley out. It's that real small circle. That's the separate municipality. So. Okay, North Surrey down a whopping 13.8%. Surrey's been getting hit really, really hard, especially in the condo market, especially in and around that central Surrey area. The deals that we're seeing there are like giveaway prices at this point for some of these condos, because a lot of development has happened and buyers have bought those developments and they can't hold on to them. They bought them strictly for appreciation. They didn't get it. Now they're selling at a lot of walkaway prices. It's pretty insane what we've seen in Surrey Central. Townhouses also down right now. Surrey itself, so we do separate out North Surrey from Surrey. Then there's South Surrey, White Rock, which I don't have the stats on those ones today, just because it's such a large area. MLS actually breaks them out into different market segments. So this is going to be more your Fleetwood. This is going to be kind of all the middle area of Surrey, like Queen Mary Park, all that out towards Cloverdale. Down 16.6% on the detached there, down 6% on townhouses, and condos 3.2% increase. So a little bit of a change in that area. Okay, Coquitlam sitting at about pretty steady, down 3.1%. Listings are on the drop, so interesting to see that listings have dropped almost 9 just dropped 9.1. Townhouses down 5.8%, and condos up about 1%, so holding steady. Port Coquitlam, drastic hit in the detached market there, down 20%. Days on market have dropped a bit, and inventories come down a little bit there, but not drastically. And townhouses, this whole market in this area is taking it on the chin, 6.7% down, just under 925 now, and 542,000 is an average for a condo in Poco, which that seems unheard of when we were sitting there selling some of the new developments, even like 4 years ago, when a 2-bedroom, 2-bath was starting to sell for almost 700 in that area, which is nuts. So definitely has seen some big drops in there. New Westminster down 15%, townhouses down 18.3%, condos down 9.3%. Listing inventory up in detached townhouses, but pretty flat overall in the condo market there. And then we head over to Burnaby, down 17.6%. So that is dropping rapidly. They're no longer over 2 million as an average there. So they're now just under, and inventory still creeping up. Condo market down 4.3%, townhouses 6.8% at this point. And then Vancouver East, to wrap this up, is down 8.4% as an average. In fact, it's kind of crazy to see that Burnaby North is averaging higher than Vancouver East right now. And a big part of that is because there's been a big push for a lot of people going towards Burnaby, looking for that affordability that drove it up quite high. Plus, with North Burnaby in the condo market specifically, you can see they're almost on par. They're just short periods apart. We were talking to a developer at one point who was developing they're from Concord, and he was talking about how the average price per square foot right now to build in Burnaby is much higher, and that cost obviously goes down to the end user than it was in Vancouver for them. So you can see that there's some changes. Burnaby is becoming a very expensive city, and you might actually find better deals going into like Vancouver East out here. So that wraps up the market updates for us here today. If you guys do have any questions about any of these markets, feel free to let me know either in the comments. Can definitely answer those for you, or you can always shoot me an email, Cameron@kellyfryteam.com. Happy to send you any market specific stats that you would like. But let's start talking about what we're here to talk about: first-time home buyers and the stuff that nobody has actually told you about when it comes to actually helping your kids, the young people in your life, actually start to get into a home. My biggest pet peeve is the fact that you hear on the media all the time, the youth of our generation now will never be able to afford to get into the market. The property values are way too high. But the biggest problem is that they never talk about strategies to actually get around that. They just say, you won't do it. And then the youth of today, they start like echoing that. Oh, I'll never be able to buy a home. I'll never be able to get into the market. And then their parents tell them that too, because they're just watching the news. So we as investors who are in the market, we can actually start to change that narrative by teaching people the right ways to save for their down payments, leverage off of programs that are out there, and of course, talk about the fact that you don't have to start in a detached home anymore. Condos are a great way to get into the property ladder. And we're going to show some really good examples of this later on today. And you start to climb that property ladder. But to really help with this conversation today, I'm really excited to bring three amazing ladies who are going to talk to you guys about the strategies that we can start having these conversations to help people save for down payments and start getting into the market. So we have Joanne McNeil and Cindy Dudley. Now, Cindy and Joanne, they're amazing clients of mine. They've been investors themselves. Joanne is a duly licensed financial advisor with 19 years of experience. She's a partner at Solomon Financial, and she spent the past decade supporting the Chilliwack Society for Community Living. And Cindy is not only a CPA as well, she's a real estate investor with over 40 years of experience. She's operated successful short-term rentals. She holds PMAP, CCP, and Certified Lifebook Leadership designations. You'll have to ask her what all of those mean, but if she's also a black belt in Taekwondo, so don't mess with her because she'll knock you out. But ladies and gentlemen, in the chats, let's all welcome Cindy, Joanne, and of course their partner Heather. So let me bring you guys up on the screen. There we go. Welcome, ladies. I'm gonna swap over for your presentation, and I'm gonna just let you guys run with it here. So the stage is yours. Let us know what we can do to help first-time home buyers out there get themselves into the market with all the different strategies that you guys have been teaching, and honestly having some massive success. So
yeah.
Thanks,
Okay. Yeah, thanks, Cameron. That's great. Before I start, I want to introduce my business partner, also a partner at Solomon, Heather Mosianko. And she's going to be she says she doesn't talk very much, but I am positive that she will make that
pipe in.
I'll pipe in and never stops. She always says in every meeting we have, oh, Joanne does all the talking, and then at the end of the meeting, I'm sure she talks most of the time, but she starts off quiet. It takes her a while to get started. So how we kind of came about this is, like Cameron said, we're clients. Cindy and I are clients of Cameron's, and he's awesome. And on the side, obviously, we have different professions besides real estate investing. And one, we started looking at things. My son had, we did a scenario with my son, and then we did a scenario with a client. And we're like, wow, these programs are really working. And just being in the market, and already Cindy and I have a multi-unit together, and Cindy is fabulous at finding any government money, like the queen of free money. So with her being the queen of free money, and with my financial background and putting strategies together, it's really come out pretty cool on a couple scenarios. So that's what we want to show you today. Pop in, ask questions along the way. Cameron, you can interrupt us, and we're just going to go through some of this and just show you some things that we have come up with just to make it easier, because it's not easy out there for young people to get in a house, and free money is exciting. We like that, right? Okay, Heather, next one. Okay, so these are the demographics, just what Cameron was talking about. We looked this up. A typical BC first-time home buyers between 36 and 46. Well, I don't think that's very young, right? So I was so surprised of that as we talk about young people. And like I said, my I was like,
Hey,
oh.
I'm in that demographic too, and I still feel young.
Yeah, okay, there. But do you feel like you're a first-time home buyer? I bought my first home, jeepers, I think I was 21.
Me too. I was 21 too. Actually, I was 22.
Yeah. Yeah.
21 as well, yeah.
Yeah. So it's so funny I say that. So my son just we helped him buy a condo in Abbey, and he's 21. But really, the client scenario that we have here for you, he's a bit older, but he's still way under this age. So that was alarming. And then in Vancouver, 46, right? Well, that's definitely due to down payment hurdles, right? Everyone thinks you have to have 20% and all of this, and it takes you, when you're looking at $1.9 million, what Cameron was talking about, I'm like, that's a big chunk of change to be saving 20% for and stuff. Longer renting phases, people are actually, the average now is they rent at least 6+ years. And then this is what, when, I don't know if everybody knows what JV is. I heard Cameron say that that's called a joint venture, and Cindy and I do that a ton. And that's what co-buying, that's what's happening. This market is forcing people to co-buy and do joint ventures. So many young people need help. They either their parents or their friends or who's ever willing to assist. And these are some of the strategies we're going to talk about. And just because it doesn't have to be your forever home that you want to buy, it's just get in the market and start building equity and build leverage, right? Okay, so this is BC's. I don't know, because of the prices. It says BC is the most generous province, but I think that's why that we have to be the most generous province, because it's super expensive to live here. So these are the programs as a financial advisor and a real estate investor that we stack together. There's 6 programs. The RRSP Home Buyers Plan. You can withdraw up to $60,000 from your RSPs to put as a down payment, or you don't even have to put it as a down payment, because I would suggest you do not, you do 5%, do as little as possible and keep the rest of the money, but you still get to pull it out tax-free. You have to pay that back on this program within 15 years, and you get the first 5 years without having to pay a payment. And if you don't pay it back, which paying it back means put it back in your RSPs, you can just claim that little bit. So that would be $4,000 a year over 15 years that you could claim on your taxes if you didn't want to put it back in, as income, if you didn't want to put it back in your RSPs, which sometimes when I look at, as an advisor, you look at everything. And sometimes I prefer to do that. It all depends what stage of life the person's in and if they need those RSPs. So first time home savings account. So this is new. This just came out. And you can have up to 40%. The nice thing about this, the RSP Home Buyers Plan, you do get a tax deduction, but you have to pay, that's the portion you have to pay back. In the first time home savings account, you get the tax deduction. And when you pull it out to buy your home, you don't have to pay that back, which is sweet. So when you're looking, and so you can have up to $100,000, and you're in a 30% bracket, you're going to have a extra $30,000 tax deduction on that. And you can pull that $100,000 out and use it for a down payment. Now people say, okay, but you just talked about not having enough down payment to buy a house. But we just did this with someone, Heather, our client. I don't even think it's a full 3 years we worked with him. And I don't think so. It's maybe 2.5 years. And
are you talking about just 3 years?
Yeah.
Not quite, actually. Yeah.
Yeah. So it's just save. And he's been able to do some amazing things, and we'll show you his plan later. BC property transfer tax. This is something, Cindy, you want to talk about this? You're
Yeah, well, this is just a quick overview because we have an actual full slide on it later. But you can save up to $8,000 on homes up to 1.1 million, but actually it's up to $14,000 now and that shows on the slide when we get there. So yeah.
Yeah. And so this is something that Cindy's great at, is keeping up, because the numbers change all the time, even from when we looked a couple months ago. Now they're up even higher. And then first time home buyers tax credit. This is something that's new. And then 30-year amortization. So all of these will put together for a plan and actually get some money back in your pocket or get you in a property.
And the GST rebate. And we'll talk.
Oh yeah, I missed that. That's the best one that we really love for exactly what Cameron was talking about. Those condos that you're looking at. I'm listening to you, and I just want to say, I always tell my boys that nerds rule the world. And listening to Cameron talk with those stats, I was like, oh, he's such a nerd. Yeah. So, obviously, if you're interested in something in Surrey, that sounds like a smoking deal to me. If people are giving it away, maybe someone could use some of these strategies to pick themselves up a discounted condo or something in Surrey. Anyway.
So that's right, because there's a lot of those pre-sales that are now coming on the market and they're looking for ways to sell them off. And the first time home buyer, but because they're a new build, they get the GST rebate anyway. So, so you can look at it either way, but they do. Sometimes the builder will take the GST rebate and not charge it to the clients, but we haven't found that with the ones we've been dealing with recently. And so we had to come up with the GST as well. And so because we were able to sell to Joanne's son, who is a first-time home buyer, we didn't have to come up with the GST. They added it to the mortgage, and now he's going to be able to collect that money back. And we'll go over that in the scenario that we are talking about.
Yeah. Basically, this just says, again, how it works. Withdraw up to $60,000 per person from RSP. So if you actually have a couple, it's double, which is fantastic. Repaying over 15 years. The RSP for the home buyers plan has to be deposited at least 90 days before the withdrawal. But in saying that, you do not have to withdraw it
all at once.
All at once. And if you don't need it for your down payment, which we don't in our scenario, you still take the max out. So you can withdraw it afterwards. It's just still designated at your first time home buyer's withdrawal. And you have, Heather, I believe we just found out that it's till the calendar year, 1 calendar year after you buy the place, you can withdraw. So if you don't have it, and honestly, I've seen this scenario where if you're a high income earner and you can, your debt service ratio isn't going to be a problem, but you have no money, but you have an excellent job, you could literally take an RSP loan out, use that, pull it out for the down payment, and do this all just on borrowed money and never put down anything. It's absolutely amazing. So how the bottom part is, obviously the first time home buyer needs to occupy the home as a principal residence within 1 year. And they have to be the first for the GST rebate, which is the biggest rebate that we've been using for first-time home buyers, is they have to be the first person to live in it. That's how it's stated, the first person to live in it. It doesn't say for a year, it just says the first person. So everything has a little bit different criteria. So
do we call that wiggle room?
We're going to call that wiggle room. How's that? Intention, right? And they say that right in the paperwork. You have to have the intention to live in it. Repayment example. This is exactly what I said before. Annual minimum repayment, $4,000 a year, $60,000 divided by 15 years. So this is just new. The repayment doesn't start until the 5th year. That used to be right away. So the government realizes that housing's getting farther and farther out of reach for younger people. So they give, and if anybody, most real estate investors can tell you that the first 5 years are the hardest to make it happen. So they're giving you a little bit of breathing room there. You don't have to give back the money right away.
So if they took out money right now, 2026, then they would have to start repaying it in 2031 or 2032.
It would be the calendar year after. So
2032.
Yeah.
Mm-hmm.
Yeah. Missed payments, like I said, are added to your taxable income for that year. So that's a strategy in itself. If you're in a lower tax bracket that year, that's where your advisor or you can figure. Lots of people do their own taxes, but as an advisor, I am always snooping at people's taxes, and I was like, oh, okay. If your income's down, just claim it. Who cares? You still have that room. You can repay faster at any time with no penalty. Obviously, the government always wants that. But as a financial advisor, I feel Heather and I are very we love financial strategies, but as building those strategies, sometimes RSPs are not the best retirement money, and that is not a popular opinion. And why, if there's older people on here, they'll understand that. In my demographics, RSPs are 100% taxable at your marginal tax rate. So when you're in retirement and you're trying to balance RSPs and TFSAs, and when you're giving back at least 30% to the government of your retirement savings, that's why sometimes I'm like, don't put it back in there. It's better to just claim it as income, give them back their tax deduction that they gave you when the money was small, and then we're good to go and put whatever money you have in a TFSA. Okay. Next slide. Okay. Now, being in the world of finance is, we have many, many acronyms. So there's the first time home buyers plan. And this is so much fun for us to talk about to clients also, because it's always these acronyms. And then there's the first home savings account. So one, you could take the maximum of $60,000 out of RSPs. The other one just started. So it's 3 years in now, isn't it, Heather? I think so.
Yeah.
Far. Yeah.
It started April 1st, 2023 is when it launched.
Yeah. So what I want to tell you is, who's ever on here right now, if you ever intend to go buy a home, just go open up one tomorrow. We do this for our clients all the time. Just put $25 in it. It doesn't matter. You have to open it to get contribution room, and you get $8,000 a year, and it doesn't accumulate. It doesn't backdate or anything like a TFSA. You got to open it first before you get the first 8,000. So just go open it, put $25 in, and then go from there.
Or if you have kids, like Ross was mentioning, then he's got kids in going through university and stuff like that. As soon as they hit 19, they can open that account and not have anything.
What are you
in
looking
it.
at? Is there a chat that I can't see?
Yeah,
and there's a lot of
Comment
chatter too that you could just open it with $0. But if there's no activity in that account for a year, they'll just close it. So then you may as well just put $25 into so that they can't close it.
Yeah. Cindy, sorry. Oh, they're perfect. There, I can see the chat.
Make it bigger.
Yeah, this is good. Yeah, Ross, that's fantastic, because this and it's so good for kids, and this is a great way, because not only do you get the tax deduction if they are incoming. Oh, great, my computer's dying. Not only do you get the tax deduction, you don't have to pay that deduction back. So I'm and
the growth is tax-free as well.
Yeah. I don't know what's going on here. My computer's just give me a sec. My computer is dying, but it's plugged in. So
of course. Okay, so we can just talk a bit here too, because Heather knows this plan as well. So yeah, no repayment required, and unused room carries forward. So you get $8,000 contribution per year, correct, Heather?
That's right.
And then, and so if you have it open for 4 years, you've got a room of $32,000 that you can put in if you had the money to do so. So in this case, if you had a couple where they were both good savers and stuff like that, both partners have maximum their FHSA. So that's a total of $80,000 they would have. And then if both had, 120,000 or 60,000 in their RSPs, they would have 120,000. So a total of $200,000 in tax advantage down payment funds. Again, we'll show you our strategy, because even though the one person that we have as our example, he has money to do it, but he doesn't need to put it as a down payment. So he's still doing the 5% down, but he's going to take that and put it into a TFSA, and Joanne and Heather will go over that in a minute. So change screens. We could go to the property transfer. It's my turn. So I'll talk about it now. So most of you know the property transfer tax, and there's an exemption for first-time home buyers now. And so you can say it'll go up to the price of a home of 1.1 million, and you can save up to 14,000. Now there's a partial exemption. Sorry, I had this all figured out, but so there's a partial exemption between 835 and 860. There's it's two different things, because the 1.1 million is on new builds, and the first time home buyer is up to 500,000, and then after that there's the difference between 835 and 860. So the maximum they can get as a first time buyer is $8,000, and if they buy a new home, it's $14,000. So it just depends. There's two different property transfer tax exemptions, kind of all squished into one here.
So who has to facilitate those exemptions? Is that just automatic, Cindy?
It's the lawyer.
Okay.
The lawyer. Yeah. They must be Canadian or a permanent resident, lived in BC for 12 months, and they can't have owned a principal residence anywhere in the world. So they can't have any other, not even, I guess, a principal residence. They can't have any other home anywhere else in the world. So this is that partially, when I'm talking about the partial exemption, the 835 to 860, it just changed in April. And so that's why there's that difference there.
Cindy, I just wanted to jump in on this because this is one of those policies that was put in place a long time ago, the transfer tax. I mean, this came about in the 90s, back when $200,000 was considered luxury at that time. And so there was basically that 2% above 200,000 was the essentially luxury tax. And unfortunately, it didn't change up until last year when they gave the exemption. So the exemption used to be if it was under 500,000, you had a full exemption, and that stayed like that for nearly 20 years. So this is big news that they changed this for first-time home buyers, because even though $835,000 is not a huge amount still in BC, it does definitely help for those people who are entering into the condos and townhouse market, where it's now that's the entry level type properties. And it's really important to know too what you guys mentioned, because there's a massive difference between obviously the new construction versus resale, right? And understanding what qualifies for that. And that obviously new construction is you are the first owner buying it after the developer built it. So, I think that's very, very important, because I think a lot of people don't understand that's a recent announcement that did change just last year. So thanks for definitely pointing that out. So.
Is this you, Cindy?
No. You can go ahead, or do you want me?
No, go ahead if you're ready.
Yeah, thanks. So this is exactly what's been super exciting for us. We had two pre-sales, and the first time home buyers GST. So when Cindy was like, "Hey, we get the GST back," and then I'm always about building wealth for your family. So this is and the first one that went through, we had read it, and it's so new that the builders had no idea what we were talking about. We're like, and so this is the one my son did, and we had this, and then we're like, okay, well, how do we claim it now? And they've made it so easy to claim the GST on a new build now that it's right in your CRA profile. So that's a fantastic part. So this is, from doing a new build, it's 500. It used to be 450,000. Now it's up to $1 million. That's exactly what Cameron was talking about, how the prices go up. So it eliminates 100% of the GST of new home builds up to $1 million, and then it phases out once you get to 1.5 million. But
okay.
if you're
we have a couple questions. One just on the FHSA.
Mm-hmm.
You can still use it if you've already put down a deposit on a pre-sale. You can.
Yeah.
You use it at close. So if you need to, but you need to open it and get it going.
Yeah, you need to open it and get it going. That's the biggest thing. You don't even have to use it for a down payment, but you want to. That's exactly what it's designed for, is to get you not only the tax deduction, but you pull it out tax free, and then you can use it for your deposit.
Was there another question, Cindy?
Yeah. At first time home buyer was considered someone who had.
Yeah, I think it's 4 years now.
Oh yeah, we're going to talk about that, Catherine. I love it. I have a smoking strategies for people, older people. We actually are starting to do this with a 65-year-old who has not owned a house. And if you haven't owned a house and have not lived with a spouse, it resets in 4 years. So people who have not lived
with a spouse who has
your spouse have
yes that's correct. So your first time home buyers plan, all of these start over after 4 years. It's a great way to take out almost $200,000 of RSPs if an older person in that demographic has a bunch of RSPs. That is a huge strategy where you can save hundreds of, that's $200,000 of 100% taxable money into a tax-free investment, moving it from that. So that's a great strategy.
Okay, so let's finish the GST rebate.
Yeah.
Sorry.
No, that's okay.
No, that's right.
Oh my goodness, where am I? There we go.
Yeah, this is what we like. So applies to new construction, co-ops, owner-built homes. If it's a big renovation, they even allow that. If it's a big renovation, you can get a GST rebate on that. So I love it that they're making it accessible for so many different things. And one of the things, with big renovations, we're always about building more rooms in your house, and there's benefits also for building homes for family, like whether that's good English, whether that is a suite for a senior or a suite for your kid, so that would.
Our next slide talks about that one.
Yeah. Okay. So this is exactly turn your primary residence into an income producing asset. This is, keeping wealth in the family. I always say, try duplex, triplex. I'm sure anybody who's gone to any real estate investing courses, it's always about how many doors you can get in a property. And there's so many ways to do this. BC housing, it's kind of in the middle here. It's small print. So BC housing, low interest loan, home owners can access low interest loans, 2% over 15 years, up to $80,000 to assist with costs of converting basements, garages, and buildings, garden laneways, mortgage refinancing options. So there's so much stuff. It's house hacking. And Cameron knows so much too. So I know that he's a wealth of knowledge, but we wanted to put this in here when we're talking about free government money. there's many options for free government money. And then, you know, as we say, and then you use that to, you use that wealth, pull out your equity and buy your next home. One more home, right? One more house, right? Just one more house.
Well, and the nice thing about this is too, if you do have an elderly parent or whatever, and you're making a suite that's more accessible, it's actually a tax write-off on your income tax. So
yeah, but even if you make a suite and rent it lower, how much lower? 10% lower than market rate. They give you $80,000 too. So there's so many strategies. Someone with a cash down payment participating in first time home buyers plan is, oh yeah, never use your own cash and use as little as possible. That's my opinion. Like, yeah, keep your cash, because you know it's expensive too to have a house. It's expensive the first few years, the taxes, all the stuff that, it's great tax planning, I think, Catherine, to put their cash into it. Yeah, put it there. And then you're going to get a tax deduction. And for me, if you know you're going to buy a house right away, I would say that. Heather and I are, like I said, I'm not a fan of RSPs. I like RSPs when you are buying a house, and I like them when you have babies. And both of those things are because you get free money from the government. Otherwise, I love the tax-free savings account for an investment. So for our clients, for the most part, we put money in the TFSA. We open the FHSA, and then we put money in the TFSA, and we decide at the end of the year, are we going to roll it over to the RSP for the tax deduction, or we're going to leave it in the TFSA until we know? Does that make sense? So yes, we use the programs. We don't necessarily put it in right away. Does that make sense? Catherine, did you understand that?
So yes, short answer, yes. Put it in an FHSA and an RSP if you depending on how much you have. And actually you could put it in the RSP. You can
you can transfer to the FHSA as well from an RSP.
You could put it in the RSP, and then like now, and if you buy the house in 6 months, then you can take it out as your first time home buyer. If they are a first time home buyer, then you can take it out and you can take 15 years to pay it back, but you've already got the tax deduction for this year.
Yeah.
It just has to be in 90 days ahead of time. Yeah.
But the FHSA, and Heather does all the work. She works way harder than I do, but she it's hardly any, what is it, 10 days in the FHSA? You literally have to put it in for 10 days, then take it out.
Yes.
So that's why we're like, okay. Let's go to the next slide. Cindy, you want to talk about anything else on that one?
No.
Too late. I moved. Just kidding.
Yep. She did. It's done.
Goodbye. Okay. So this is actually our scenario. So we had a client. Condo was worth $424. Our purchase price, GST was $21,200. Obviously, down payment $21,200. We want to put down as little money as possible. The whole thing about real estate investing is use other people's money, right? That's leverage. So the funding sources, the client actually had $24,000. This is our client that we worked with for 3 years, because $8,000 a year for 3 years. He had $24,000 in his FHSA, and he just happened to get a bonus and everything. So it worked out perfect that he maxed out everything, and he had the full $60,000 in the home buyer's plan. And so he got to pull $84,000 out. And we talk about, so he got out of the $24,000, he got a tax deduction of $8,400. And out of the $60,000, he got a $21,000 tax deduction on top of that money. And actually. And I think even for the 24,000 that he pulled out, it was, the last couple of years have been fantastic in the market. So you just emptied the whole thing, and it was over 24,000. But the numbers we'll put that for the numbers.
Yeah, his book value wasn't that though. It was closer to like 18 or something. But still, like, he got the money, right?
Yeah. So this is exactly at closing. He's going to get that 21,200. So because he's a first-time home buyer, he's eligible. So that's just money back in his jeans. That's fantastic. As soon as the mortgage is signed and everything's closed, he goes on his personal CRA site, and it's easy, little calculation there. They ask that, and it's submitted electronically. Easy peasy. It takes up to 4 months to get it, of course, but that's okay. We know it's on its way. This federal home buyers tax credit is it says $10,000, but don't be excited about that, because the difference between tax deductions and tax credits are only at 15%. So out of the $10,000 tax credit, you actually get $1,500 off your taxes for that. And then these two are just saying what he got with the tax deductions for what he put in. And then the property transfer tax is literally $6,000 you don't have to pay, which is, I don't know if there's anybody from the government here, but I think that's a sham and a half, that you have to pay property transfer tax every time that a property gets sold, so it's good that they're giving
some breaks
to get people in the market. Okay.
So how much is he, before you move on? So how much is he? So he has to put the 21.2 down, and then he's taking the rest of the money and he's putting it into a TFSA
this is exactly what this guy's doing. I thought we had it on the next slide.
I think it's on the next slide.
Yeah.
Is it?
Because he didn't. Okay. The client bought with partners. This is this whole buying with partners or buying with your family. The client bought with partners and didn't need the money for the down payment. So we already put it down. That was part of it. Okay, well, that's great. So he just gets to use this money and grow it. And if you sit with most financial advisors, they will tell you this is a really good way to buy your first home, and able to roll that money in a TFSA, and all of that grows tax-free. So now, like we say, one more home. When he's ready, he has money to buy one more home. Plus, not just the $84,000, it's the tax deductions that he will get now also. Plus the tax deductions of $29,400. Thanks for putting that in there. And the rebate of $21,000. So Cindy, who is the math whiz, add that up for me. 84,000, 29,400, and 2120. That's a smoking deal. And the guy has a brand new condo to live in. So he's super happy. And
it's not his dream home. It's not where he wants to be forever. But
yes.
Oh, sure. So we can expand on that. We are the partners. So what we did was we bought a condo, a pre-sale a couple of years ago, and we put the money down. Both Joanne and I, and we have a silent partner. And
this client's family.
Yeah. And so he was looking for a place, and she let us know that. So we talked to him when it came down that we were going to be closing on this. And so we talked to him about doing this, and Joanne was able to put all this together for him. Because we had already put down 10%, we're now going in and financing it at 5% through CMHC. The GST is going on the mortgage. The 5%, it kind of balances itself out, and then the CMHC fees are all mortgaged. So he's going to be able to move into this place. He's got a good enough income that he's going to be able to do it all on his own. And he doesn't need to put any money in because we've already got our money in. We're staying as JV partners with him on it. And we're going to be able to take 5% of our money out, leave 5% in so that he doesn't have to. This is kind of why we did it this way. So he doesn't have to come up with any money to get into it. He's going to get into it. We'd already bought it. So it helps us in this scenario. And he's going to move in and we're going to hold it for a few years until the market changes and we feel like now's the time. So all of us are investing and we're all going to benefit from it in the long run, but he's going to benefit from it right now. And he's only, 26.
Yeah, he's about 26. Great young man. And I did the math myself. 134,600 he gets out of this deal of tax-free cash. It's so cool. Like it was such a good plan, and he gets a new place to live in. And so basically going forward, we just pay all of the any extra expenses and stuff divide by 4. So yeah, this is a really good way to help young people get in the market, because for him to save that and then be able to afford it all on his own is a lot. And we did this with my son originally, and it just it evolved. That's how this plan evolved, was you do it once, you kind of struggle through it. And then I'm like, well, what about this? And what about this? And what about that? And yeah, it's really, it really came out to be something special. So that's when I was telling Cameron about it. He's like, oh, can you tell people? And it's a great way to use any extra money. Now, let's go to the next slide. And
the one thing I kind of wanted to give the scenario is when we bought the pre-sales, the market was hot, but then the government stepped in and stopped immigration. The provincial government stepped in and stopped us from being able to do Airbnbs. So then the market got flooded with condos, which everybody kind of knows. And then everything started to topple. So we had to change our exit strategy. And so our exit strategy was we were going to flip it, but then we couldn't. So we either walked away and the developer got our down payment, or we had to come up with another strategy. And so this came up and we worked it all through, the three of us. And then Heather was involved with, helping get them all set up and everything. And so it was like, this works for us because now we can hold it until the SkyTrain comes in and the market starts to settle and everything starts to move again. And then we can decide then if it's time to let it go or if we keep it. Now we got options.
Yeah. And at the end of the day, and if he decides he likes it, who cares? He lives there and he's making equity. But that's the biggest thing, is to get in the market as quick as possible. Can we go to the next slide? I just want to see, because I wanted to talk about, for the people, if there's, I can't see who's on there. If there's anybody who's older, like Heather and I are doing this for a first-time home buyer who's 65, who has a ton of RSPs. He's never bought a home, and is a great way how to get $84,000 out of his RSPs. So that's perfect for another scenario that Heather and I have started presenting to clients is if you know you're going to sell and downsize, if you're in retirement, you're going to sell and downsize, rent for 4 years. Rent for 4 years. And then you can take advantage of the first-time home buyers plan and all of that again. And if you have RSPs, that's where we said you can take, you know, up to $200,000 out of your RSPs and do that. So that's great. Go ahead, Cindy.
Yeah. So Jessica has a question.
Okay.
There you go. Just to clarify, the client opened an FHSA but didn't end up using the money he saved and instead rolled it over tax-free to a TFSA after closing. Correct.
He had to withdraw the FHSA, and it's just a form. As long as you can prove that you are purchasing a property, they'll let you withdraw it. But yes, then that money, because he didn't need it, we are just putting it in a TFSA.
Yeah. That's the financial side of it. That's what I suggest is max out these, whether you need them or not. It's a good way to get that money out. Yeah. So we put that money in a TFSA for him because it wasn't needed for the down payment. But that's what I think everybody should do is max out the withdrawal, whether you need it or not. Some people don't, they leave it because my demographic was taught to keep your money in RSP. So I know when I bought my first home, I just took out only what I needed. And that was silly. But now I'm so much older and wiser. Yeah. Any other questions on that?
Next slide.
Sure.
Yep.
Yeah, these are just some ideas that.
Yeah. So these are common mistakes to avoid. Not opening an FHSA early enough. Open it now and, well, it says 0, but to Heather's point, put in $25 and start the carry forward clock. You forget the 90-day RSP rule. So
you know what?
You got money in there 90 days before you take it out. Especially
if you need it for your deposit. And that must have happened a lot because the rule did just change that, that it's evolved where you get up to the calendar year to move it. So borrow some money from your parents to the down payment, and then 90 days later you can pay them back. Yeah.
So, and making sure your lawyer does know that you've got the first-time home buyers property transfer tax exemption available, so that he doesn't miss it. And missing your repayments back into your RSP after the 5 years. If you don't want to have another $4,000 on your income, these are just things for first-time home buyers. Buying too much house, investing a lot, but not being able to make the payments, ignoring the stress test, not checking local zoning if you decide you want to set it up so you can rent rooms or whatever as extra income to help to make the payments. And that's it. Those were our resources. So any questions?
All right. That was very informative. I mean, it's super cool to watch the live, this deal that you guys are doing right now. This is an active deal, guys. If you're watching this, like they are actively closing on this with their client on this. And it's kind of neat to watch how you guys map this all out. And I think what's really important, what you guys said as well, is that, the market changed. We all know that. We've got a lot of people who bought pre-sales. I mean, we are well known for selling a lot of pre-sales at the time. They were a great strategy when you could Airbnb, when you could rent them out easily. And then the government just goes, no, 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 no. And you can see how a creative, strategic investor starts thinking, how can we make this work? And I think that's the biggest difference between what you guys are doing versus what the average person who goes, I'm just going to sell it, take a loss, I can't deal with this. Like, this is super creative. And now you can hold on to this property, build equity. You're helping somebody else get into the market who's in his 20s. That's fantastic. And he's going to save a ton on taxes and everything else too. Like, I mean, you're impacting his life significantly while still putting a strategy in place for you guys to be able to pivot to the market. So if anyone does have any other questions, feel free to throw it in the chat now. And maybe I'll just throw it to you guys in case anything comes in. What are any other like final closing thoughts from you guys as well, just to, leave with these people for these first-time home buyers? Because again, most of the people on this are typically investors such as yourselves. They come into this every single week, but I think this was a great topic that we can have where we as investors who have learned these strategies, have actually bought multiple properties, can start to impact the rest of the community to start changing the narrative for the young folk out there. And young folk, I mean, now we just found out that my demographic is the ones of the young folks. So.
Well, you just said folks, so I don't know.
Yeah.
Said folks.
I think, and this is what I love about our partnership is we love to brainstorm. Never once did we ever think, oh, we're just going to sell it and take a loss. Never. Okay, how do we make this work? There's always a win-win solution. And it was so funny. The timing was just amazing that, my son on the first one and the other person's son and, lived totally. And we're like, this is going to work. This is going to work. And so if you're looking, and this is something Heather and I talk about, and Cindy, are you looking at the situation or you're looking at the solution? Right? So if you're looking for a solution, solutions come. And if you can make it a win-win, it's golden. That's big.
Well, I said that to our other partner and I said, okay, so I said, our options are this, and this, or we walk away and lose the money. She goes, hell no, we're going to make this work. And sure enough, we were able to do that. So it's great. I think it's a really good way for, and I mean, if there's investors out there that have, these pre-sale condos that they're going to have to close on, even if it's not within the next, few months, if their pre-sale is supposed to be finished next year, start checking with your kids, your nieces, your nephews, or whoever, anybody who might want to get into the market and be part of it.
Mm-hmm.
Well, and even if they're still working in tight on cash, like my son, $21,000 is a lot of money for him. You can live in there and that pays your rent, right? And we would never get that. We're not getting it anyway. So that's what I was like, it's just money on the table. Let's take it, right? Like that's money on the table. We're not first-time home buyers. So find a first-time home buyer who can at least get that money and make some use of it. That's the biggest thing.
One of the strategies you guys talked about is even just like renting rooms. Like imagine now you bought a pre-sale and it's a 2-bedroom and you've got someone who's younger who can use these strategies to get into it. You can pass that off onto them. And then they turn around and find a roommate on top of it all. And now they're basically living for dirt cheap, owning a property, having all these tax exemptions. Like this is how the creative brain starts thinking, how that solution orientation, right? So no, I think that's fantastic. And we have a client, she's, not in the young demographic, but she's thinking that way too. She goes, I've got all these rooms in my house that are empty now. She has stacked them full of kids now that are renting for purposes of school. She's living basically mortgage free at this point. So if you are in houses, you are empty nesters, you could look at downsizing. That's one thing. Or maybe look at these house hacking options to save some cash too, and teach the young people in your life. And I say that word loosely because again, I just found out my demographics the first time buyers now. I'm gonna hold on to that because I was talking about being old in the office today. I was called old recently in the office, so I'm like, I'll take it, right? So, at the end of the day, these are phenomenal strategies, and start thinking outside the box. And I highly, highly, highly recommend. If you guys know anyone, reach out to Joanne, Cindy, and Heather. What's the best way that they can reach you guys if they want to have questions or have some consultations with you around these strategies or financial, opportunities?
I think for Joanne and Heather, you just call Solomon Financial.
Yeah,
okay.
Actually, it's probably better to email me if they.
Email Heather. Or call her. Because I never answer and I don't schedule anything. So
and Heather, what is the email to email then?
I am trying to put it in the chat here.
Okay,
I don't know what I did.
Yeah, Cameron, when I was a kid, that's how I started buying real estate. Was I had a house with I bought my first house by myself. My first house was like 68,000. Then I had bought another one for 72. But I had 2 roommates and then I saved enough money and then I moved out and they got another roommate. And then I got another roommate in my other house, and I felt like I was a slumlord, but I lived for free, and it was just fun, So yeah, I love just that house hack. You got rooms. People need affordable housing. People need affordable housing because you hear all the time, and as being in the financial industry, you seniors need housing, so you don't have to rent to a kid, you can rent to a senior, and because everybody needs to eat, and lots of people are choosing rent or food.
And we have somebody actually on one of our other scenarios. He only needs to be in Langley 3 days a week, so the rest of the time it can be an Airbnb.
His principal residence and Airbnb on the side.
Yeah. So that's going to work out well too. So there's lots of different flexibility to go on. It's just being solution oriented and brainstorming with people sometimes, right? Yeah,
that's it. And this whole conversation, came about because we were doing the deficiency walkthrough, and you had just discovered the GST rebate that got rebated back to your son. And we were literally going through that process, and you're like, okay, I'm going to let you know what happens. And we're sitting at the Safeway Starbucks, hashing this out, talking about it. And I go, we need to put this out there. This is what people need to know. And that's what brought getting the whole crew here available on and shifting all of our IPG off of straight investor talk to what we can do from here, because honestly, this is great from an investment perspective too. And we can start impacting more lives where everyone else is telling them no, right?
Yes. Yeah, 100%. And I think, everybody, what you said with, you don't think people will be, or young people, younger than you people will ever have a house. And it's not factual, it's not factual. It's creative financing. And that's what I think we do the best. Creative financing, right? Yeah.
Amazing. Heather, were you able to figure that out? Okay, what's
I
your
just
email?
can't log in. Sorry, it's I don't know what my password is, but it's Heather Mosienko. So my first and my last name, and Mosienko is MOSEANKO at solomonfinancial.ca.
Longest email ever. We always say longest.
Right.
Jay McNeil, and I got Heather Mosienko. It's the longest ever. Yeah.
And Solomon, just to make sure I got the spelling right, SOLOMON financial.com or .ca?
.ca.
Okay. All right, guys, I just dropped it in the chat for you guys there. So that is, I believe I got that right then. Perfect. Yeah. So guys, if you want to have consultations on this strategy, if you've got children, I know a few of you guys in the chat were talking about it, send Heather an email, book a time to start going through this. And if you've got young children, 18, 19 years old, this is definitely the time to start thinking about these strategies. Even younger, TFSAs and everything like that, start having these conversations, start planning ahead, and you can then impact someone's life a lot earlier than, everyone else who's just watching the media. Ladies, I really do appreciate you guys joining me here tonight, sharing these incredible strategies. This was really cool. And Cindy specifically, because I know you were not feeling the greatest and you still pushed through. So thank you so much. I appreciate all of you guys. And I can't wait. I got a chance to talk to Austin the other day, because obviously now I'm involved working with him, and I'm super excited to be able to hand him his keys in another week or so here. So super awesome.
Yeah.
Right.
Yeah. Thanks, Cameron. Thanks for having us.
Yeah. Well, thank you guys. All right. So I am going to move into our next segment here. So we're going to talk about our hot buys on the market. So again, we're going to stick with the theme of the hot deals out there today and go into the hot buys. So these aren't cash flowing deals, but if you're a first time home buyer and you're watching this, whether it's a replay or you're here tonight, or somebody who could benefit from buying one of these are the types of deals that are out there. And the prices, honestly, this is where I'm like, there's opportunities in the market today, because we have not seen these prices in years. So here are our hot buys for first-time home buyers. First one, there are still distressed sellers in the pre-construction. And you just heard from everyone on the panel tonight how you can take advantage of new construction, between GST rebates to property transfer tax rebates. This is one of those scenarios. And in this case, The contract price is $404,000. This is out in Mission, British Columbia. Silver and Cedar by Redicop Fay, a developer we've done a lot of work with in the past. They've paid a $40,000 deposit, and you can see it's a deposit forfeiture in this case. They're asking as low as $325,000. That is their walkaway price at this point. So you're actually going to get this at a screaming deal. It's a 1-bedroom, 1-bath. It is smaller, 464 square feet. However, you're getting into the market very, very affordable right now. This is what the unit looks like. Super livable. As you can see, modern finishings all throughout. The development's going to include some modern amenities as well. This is in a really nice area of Mission as well, just up on Cedar and Cherry area there. So you're quite a bit north, and yet you still have access to drive everywhere you need. And so again, if you guys are interested in this one, hit me up, because again, $325,000 for a 1-bedroom when everything else is going for the high, like into the fours still in that area. This is a screaming deal. We've got one here. This is a resale property over on Atkins Avenue in downtown Poco. I think this one's a great opportunity because it's under $400,000 right now. A 614 square foot, 1-bedroom, 1-bath, originally built in 2006. It's a ground floor unit with a private entrance. What's really nice about that is you walk right out your front door into Gates Park. So beautiful. If you've got dogs or anything like that, this is a fantastic property. It does need a little bit of work, I will say. So this is an opportunity for anyone who's got a little bit of a, ability to do some light renos, full paint job, some new flooring, and this place will shine. Not only that, if you do some work as a new first-time home buyer, this is a great way that you can take advantage of another money-making opportunity about forcing the value up. Right? We talk about 4 ways to win as investors. One of those is forcing the value. Good fresh paint job, new flooring, a little bit of repairs here and there. This place will look absolutely new again, and you're going to have a fantastic property. This is what it looks like currently. Again, nothing terribly wrong with it. Just the hardwood floors are older, need either to be sanded and restained or replaced if they're not your vibe. Nice fresh paint job. Nothing really wrong otherwise with this property. And yeah, great entry level. It's a very large one, 614 square feet. They make new builds now at 600 square feet with 2 bedrooms. So you got space with this one, which is nice. This one out here is in Maple Ridge. This is a newer development built in 2024. It's a 1-bedroom plus den. So if you are somebody who is a first-time home buyer and you need that extra space for an office or work from home, 700 square feet, quartz kitchen, countertops, premium stainless steel appliances, nice open floor plan, versatile den. Actually, I know a lot of young couples who are buying 1-bedroom and dens, and they're using it as the nursery. So when you put nursery ready den, I've actually sold multiple 1-bed and dens where the nursery is the den until the kids are older, but it got them into the market, building equity, and then they upsize from there. It is pet friendly, steps to West Coast Express and Port Haney Station. Again, super lovely unit, as you can see here. And then our last one, this is a studio style. This is what we were talking about in the city, Surrey Central. This is Flamingo. Now, fun fact, I had a viral video about this property because this was built on the site of a notorious strip club back in the day, the Flamingo Hotel and the Bird Lounge. However, it is now a beautiful new tower, mixed-use commercial. We have a studio style unit with 1 bath. It's 426 square feet, built in 2025. It has not been occupied yet. So there is still possibly some opportunities for first-time homebuyers to still possibly qualify for some GST rebates. Definitely talk to your accountant and your lawyer on that. But again, really nice little unit and spectacular views. You're up on the 14th floor, and the amenities in this building, like the gym, rivals that of some you'd pay to go and have a membership at. So again, those are some examples of some pricing out there right now for first-time home buyers. So when people are out there and you're hearing the news talk about how there's no affordable housing, they're strictly talking about detached. You want to enter into the property ladder where you can afford it. And for many people, many young people, it's going to be in a condo, and you can start building equity and work your way up. And that always, I've told this story before. I think I might have said it here on IPG, but we had a client. This is a perfect example of it. This is a 10-year plan where she bought a condo. It was, I believe, a 1-bedroom in North Vancouver. This is even prior to me being licensed. She bought this condo, lived in it for several years, She got married, started having children. She sold that condo. Using that equity, she moved to Langley into a beautiful new townhouse, ended up having a second child, and then eventually took in her aunt. So now there was a family of 5 living in this townhouse. It was getting a little tighter. We sold that. We bought a house in Cloverdale with a suite in the basement that she could rent or Airbnb or do whatever she wants. And now she's in a detached home, and it was a 10-year plan, but she got in and she climbed the property ladder, and it started off with condos no different than what you see here. So great opportunity for a first-time home buyer. Let's have that conversation. Let's connect with Heather and Joanne. Let's put the plan in place, and let's start shopping for your homes. All right, guys, we have some, just wrap it up here. Again, we would love for you guys to follow the Kelly Fry team. We are across almost all social media platforms. All you have to do is type in Kelly Fry team, follow us. Our marketing team has been doing a great job, having some fun antics out there. The content's great, but of course you get updated on all of our big events that we're hosting. We post anything about these types of listings and opportunities that you could see for first-time home buyers. Also, if you're not already, subscribe to the channel here. You can access all of our future videos or our live streams. Of course, I'm posting a lot of content on this channel now, especially in short form, as well as you can watch all of our past live streams for IPG back. So all of them that we've done since we moved over to YouTube are there for you to start consuming and educating yourself to become better investors, better buyers, better sellers, whatever you guys need in the market today. And of course, there's also the Manning Up on Real Estate podcast. So that's a different channel that you can go to. Just search it on YouTube, Manning Up on Real Estate. We are dropping an episode nearly every month there. We're getting into an amazing rhythm, and we've had some really cool guests on that podcast as well. So we just did one that was all around using artificial intelligence. Honestly, my mind was blown, and I think I do okay with AI. And Scott Tolar, he was one of our guests. You can see here just down in the bottom right. He absolutely blew my mind. And then we just launched our new brokerage. So we did a podcast episode about that. Keller Williams Bold is here, folks. So you might have heard me talking about it on social. Yes, we are at a new brokerage. It's still Keller Williams, but we have new leadership in place, and we're really excited about it. So that's been happening in the background as well. And again, you can listen to the podcast. If you don't want the video, check it out on all of your major podcasting platforms. And then finally, join us on our Facebook group. This is where we post updates when IPG is happening. I post articles in there. You can also post yourself if you did a deal you want to share the details of, like what Joanne and Cindy just did with Austin, or you want to look for JV partners, or you're looking to sell something. Guys, we've got a community. We would love more engagement in that community so we can all grow together. And with that being said, oh yeah, sorry about this. Last one. You love ice cream? We'd love to have you guys out for a ice cream on us. May 31st, coming up in a couple weeks here, we are going to be hosting our 4th annual ice cream social. So all you have to do is check it out on Eventbrite, scan that QR code, and register your tickets. And when you come out, we're going to have games for the kids. We're going to have free ice cream from Rocky Point Ice Cream, one of the Tri-Cities most famous ice cream stops. They're going to be bringing out their ice cream truck, and we're just going to have a blast. It's always a lot of fun. In a world where things have gotten so expensive for families to go out and do things, this is a great way that we can give back to you as our community to come out for a free event, have some ice cream, and just honestly take photos with the kids. We got photo booths. It's going to be a lot of fun. So we'd love to see you out there. And even if you don't have kids, come on out, have a free ice cream on us, because it's still fun for the adults as well. And with that being said, our next meeting is going to be on June 25th. So mark it on your calendars. Join us in the Facebook group so you guys you know about it. And with that being said, thank you guys so much. I see you guys in the chats here. Thank you so much. One second here, Ross, for joining me here tonight. Thank you so much, Cecile. I appreciate you guys joining me tonight. If you guys do have any other questions or want to know more about the stats or opportunities in the market today, hit me up, Cameron at Kelly Fry Team. And much love to all of you guys. Thank you so much for joining me tonight.